The report is great.
You.
It gives us, a good picture of exactly what we should be looking at the main pitfalls and the main challenges. What surprised you the most in looking at the report?
What's become very clear is despite this massive injection of cash into the global economy, 10 trillion from just the 4 largest central banks alone, we haven't really spent as much time investing in dealing with not just the short-term emergency of the crisis, but the long-term emergency, which is productivity growth. And what this report does is looks at those 12 factors that really matter for long-term growth. And it's very clear that even though there's been investment in, for example, ICT adoption, there hasn't been the commensurate investment in human capital and skills so that people can actually work with technology. There hasn't been as much investment in improving institutions. There hasn't been as much investment in improving infrastructure. So there are a number of areas where a lot more needs to be done, hasn't been done in the relatively positive outlook of the last few years. And now that we're looking at a possible slowdown, we have a very, very narrow window left to make some of those investments.
Saadia, one of the things that you also point out is that basically it's the global competitiveness gap that is particularly concerning, and especially at a time when the global economy is facing a downturn. Are there countries that could be more competitive that are just not putting the structural reforms in?
Absolutely. I mean, that's what comes across for all countries, even countries that are at the very top. So Singapore, for example, is number one. The U.S. is just behind. The U.S. is, the best out of all the large economies, out of the G20, the G7. But even with these two economies, there's a 15-point gap to what we call the competitiveness frontier. And they need to be doing a whole lot more in terms of the skills of their workforce, in terms of their infrastructure, in terms of improving business dynamism. In the case of the U.S., there will be some concern in the future in terms of trade. We're starting to see a downturn in the business sentiment already. That's included in this report, even though this is a very long-term index. So it's very clear that there are some things missing near even the countries that are at the top of the rankings. And then, of course, if you look much further down, if you look at some of the BRICS, if you look at some of the larger of the G20 economies, a whole lot more needs to be done on human capital, on skills, on business dynamism, on the innovation ecosystem. It's not just about investing in ICT and into research and development. It's also about ensuring that those products make it from the lab onto markets. And those are the kinds of things that these countries haven't spent an enormous amount of time doing, not in the investment, nor the structural reforms or the incentives that can be created by the government.
But Saadia, how much does this have to do with the trade war? So, you also highlight the fact that executives, business executive, and I think you spoke to 13,000 of them, are worried about, or they have lower confidence and are worried about the uncertain future. Is this trade related?
Yeah, so there are a couple of pieces to this. We're not yet seeing an impact in the hard data. And I think that's understandable given that these are fairly recent developments and given that they're affecting still a fairly small number of products. But you are starting to see that downturn. And I caught the tail end of the interview you were doing with the head of the IMF. And it's absolutely about the sentiment of uncertainty. And that is going to change how people make their investment decisions today.